to the U.S. Hi, everybody. I'm Ashley Webster in today for Cheryl Casoni. Also joining me for the hour, Tyler Vernon, CEO and CIO of Biltmore Capital Advisors. And yes, our very own Sandra Smith. Guys, thank you for joining us.
Here very quickly,
Would you buy into this rally? What's this about?
Well, I'd buy in the short term. I think investors, there's a different mentality that we're seeing at this point. We're seeing at Biltmore Capital across the board that people just want out. They can't stand this volatility. They're done with this.
Get me out of this.
And we are implementing, more shorter-term trading strategies that can both go long and short. And I think these are the types of points where people should take the opportunity to be getting out. There might be a little bit more room to go, but I think, again, the traders are going to be driving this up and down as we continue to go.
Well, and Sandy, in a panicky market, people just bail out of everything. They get cash and treasuries. And do you think that's why gold was hurt so badly?
Yeah, absolutely. And don't forget, we're in the final days of the third quarter here, and folks have to do a little bit of window dressing. I'm sure that you're familiar with that. At the end of the quarter, when you have such big losses in the stock market, you've made so much money in gold, why not sell some of those gold positions? Certainly, we can attribute a lot of the recent sell-off in gold to that. But to be sure, something I keep pointing out is if you look at a 10-year chart, gold does show that it has had sell-offs of over 20%, like we're experiencing right now, Ashley, and it bounced right back to record highs. So history does paint an awfully bullish picture, even with the sell-off that we've seen recently.
We saw it here. You talked about the environment being different over the last 20 years. Just over the last 2 years here, we're seeing more regulation, tougher access to credit, and a lot of other things that are making it difficult. Do you think this is going to be heard by Washington's ears?
No. No. I mean,
that was a loaded question.
You have the president was given a blueprint by his own debt commission, which talked about tax reform, and he then threw it out the window.
In 2004, first of all, I think this is a great idea. I think we need some type of stimulus, and this is a great way as to not go into deeper and deeper debt, bringing $1 trillion onshore. One of the things, and a lot of the critics to this plan say in 2004 that was done and nothing happened. It wasn't spent. Is there anything that could be done to tie this to employment or infrastructure spending to make this work?
Well, you could have conditions. If you had a tax holiday, which I'm against, you could have conditions that the money be spent on plants or employment in the U.S. The problem with the tax holiday is it's a one-year thing that happens every 5 or 10 years, and it cements a really bad permanent system. The key is to change the system permanently.
We'll see how that goes. All right, let's go back to the market rally right here in the U.S. Tyler, you say the average stock is held for just, what, 2.5 months?
2.5 months.
So whatever happened to the buy and hold strategy? Is that out the window?
I think that's out the window. And really, that's where Biltmore has set itself aside in the market. One of the things that we're doing is implementing lots of strategies to the tune of 25 to 50% of portfolios that can both buy into and short stock markets, currencies, metals, exchange rates, et cetera. And we think that over the next 10 years, just like over the past 10 years was, that this market is going to be very choppy. And I think we need to get different this time and get into a lot more flexible strategies.
And with that in mind, what are your picks?
Well, there are some opportunities in the markets. First of all, I think the oil theme is interesting. And what I mean by that is emerging markets consuming more and more oil. The problem isn't that there's no oil. The issue is it's getting harder and harder to find. Seadrill is an offshore driller. They specialize in very harsh environments, very deep water drilling. The company sports a 9 to 10% dividend. So investors are getting paid a lot of money to get paid on this one. Again, they're executing across the board. Very interesting play there. Lenovo, very PC manufacturer. They're growing their PCs by 22% a year as far as their shipments in an industry that's only up 2% a year. They're taking market share away. They seem to have been
around a while, but they continue to survive and move up.
Yeah, they're again, the CEO is executing on all cylinders. They're introducing a tablet over the next couple quarters. They're executing on their smartphone business. So again, these two are definitely shining stars in this environment.
Very good. Any sectors you stay away from?
Financials, I think I'd rather be in Vegas at this point, putting it on black. So again, I think it could go either way. There's a great story for it, but there's a great story against it. I'd be clear.
Okay, no doubt about that. Stay away from the financials. I've got to talk about gold.
Yeah, I saw that.